So all those headline stories coming right up. I'm James Chow with a lunchtime roundup on all the latest world news. It's midday here in Beijing. China has raised the price of gasoline, diesel and aviation fuel by more than 8%. It goes into effect starting Friday. The country's chief economic planning body says the drastic increase is to ensure supplies throughout the country. It also aims to narrow the gap between domestic and international prices. My colleague Han Bin reports.
For the first time in over a year, China has raised wholesale price of gasoline and diesel. Taxi driver Zhao Yuxiang found the price of gas per liter has risen 0.8 yuan.
The rising prices could affect our work, so we hope the government's commitment to reimburse us will be carried out.
Zhao used to spend 220 yuan for 40 liters, but now he has to pay an additional 40 yuan to get the same amount of gas. But it's not only car users that have been hurt by the price hike. Oil-dependent sectors such as transport and building will also be affected. And these sectors, in turn, will pass on these new costs to others. However, some others, like oil refining, are beneficiaries. Professor Zhou Dadi from the National Development Reform Commission says the current price hikes are reasonable and necessary.
For a long time, China's energy prices have not been changed due to certain policy regulations. But the imbalance between oil prices domestically and internationally has already created problems. And the change promotes the process of returning to normal ratios in the future.
But the increase in prices is likely to jeopardize its efforts to curb the rising consumer price index, or CPI. However, analysts predict increases are unlikely to lead to inflation.
Inflation is not generated by the prices of energy. It's mainly because of the excess liquidity.
The benchmark gasoline and diesel oil retail prices go up by 1,000 yuan per ton, with the price of aviation kerosene going up 1,500 yuan per ton. The prices of natural gas and liquefied petroleum gas remain unchanged. People's reactions are mixed.
I'm not willing to pay any extra amount. Oil price increase will encourage people to save energy and improve efficiency.
Nevertheless, the rise in energy prices will bring changes. China has been struggling with how to deal with the rising global oil prices while reining in record inflation at home. Experts believe if the global crude oil price is maintained at the current high level, there is still room for the Chinese government to raise domestic oil prices even further. I've been CCTV.
Well, China's hike in fuel and electricity prices could help cut down on government spending. Experts also predict that it will help encourage energy saving and reduce polluting emissions. But another concern is the consumer price index. Chen Yizhun looks now at the possible impact on inflation.
Analysts say that China's fuel price hike announced late on Thursday is expected to reduce the burden on government's fiscal spending, and this is because the government has in the past largely subsidized oil refiners to keep fuel prices relatively low. China's oil price has been the lowest in the world and is just 60% of that in the United States. This means that high-emission vehicles such as SUVs are still popular in China, even demand for them is falling in other countries. The latest move is expected to help reduce emission and save energy by discouraging the use of such gas guzzlers. Analysts also say price hikes in fuel and electricity should not have a large impact on the CPI. Prices of electricity in households will not be raised. Hikes will also not apply to the agriculture sector. This could help stabilize rice prices and reduce upward pressure on inflation. Meanwhile, the hike in domestic fuel is set to boost stock indexes as shares in oil refiners and power generators rise, while this will put upward pressure on long-term bond yields. But analysts said the immediate market impact is expected to be small because investors had already been speculating about it for a couple of weeks. 陈丽君 CCTV。
Now, if you just joined us, we're talking about the new price hikes here in China. For more on that, we're joined now by Tang Min, the Deputy Secretary General of the China Development Research Foundation. Dr. Tang, thank you very much for joining us here today. Lots of exciting news. I'm not sure if it's good or not, but oil prices, as we've heard, have soared nearly 40% worldwide this year alone. Big change there. Now, one of the main reasons why Chinese authorities have lifted these prices is, they say, the disparity between domestic and international differences. The difference between the two, they say, is causing this change. Now, some say that Chinese oil refiners are losing valuable money because of the low prices at home. Now, do you think this new hike that's been announced today is an efficient and effective way to improve their eventual returns?
I think so, and because this a lower domestic price and high international price for quite a while, so oil refining losing a lot of money. So increase the price, they will help them. But I would say that only help some, because still even increase this 8% still far below the international price. So and they improving the current situation, but could need the further help.
One of the exciting things is, of course, that both home and abroad, that the prices are changing each and every day, every moment even. Oil prices in the United States temporarily dropped below $132 a barrel on Thursday. Now, that's partly because of this price hike that's been announced here in China. Is there a strong connection between the two necessarily, or are we looking far too deep into this?
I think so, and in fact they are linked. Before China announced this policy, the oil price of 138, 139, in fact there were tendencies to increase, but Shell have some problems there. But whenever the world market hear this news, and right away price dropping. This is not surprising because China is one of the major importers of oil.
One more question. The government says it's going to introduce subsidies to help ease the pressure on Chinese power plants, also on the agriculture industry and also public transport. What do you think about these? And more importantly, we always want to know how it affects the ordinary person, the man on the street. Is he and how is he going to be affected by all these changes?
And depends on the person. If this person have to have a car, he will have to pay more. But if the person only use public transportation or do not use much of those, they will have very little impact, or the impact much less. Now with this government policy, I think will help general public, particularly to the poor, to the farmers. I think this policy is good.
So we're in any doubt, stick to the subway and even the bike, right?
I think so.
Thank you very much for joining us here today.
Thank you.
That was Dr. Tang Min, the Deputy Secretary General of the China Development Research Foundation. Now, in the meantime, let's move on to other news.